So let me push play on the recording, and yeah. So hello everyone. Once again, we saw each other like 1 hour ago, and right now the time has come again. So we are discussing the U.S. advanced GDP data, which will be out in about, if I'm not mistaken, 10 minutes exactly from now. And as you can see here, me and Max are here to cover this data for you. So let's take a look at the forecast, which stands at 0.8% this time, while the prior figure was at 2% sharp. Let's take a look also at the historical movements of the indicator, and here is very important to mention that the U.S. economy expanded at a pace of 2% annually according to the final read of Q3. Businesses gained 56.8 billion worth of inventory in the third quarter, the smallest since the first quarter of 2014, and down sharply from 113.5 billion in the April-June period. Consumer spending, which accounts for more than 2/3 of the U.S. economic activity, grew at 3.2% after expanding at 3.6% in the second quarter, indicating a solid domestic demand. At the current moment, as I already said, analysts expect GDP to be much softer at 0.8% in the fourth quarter. The reasons for the slowdown are actually well known for all of us. These are lower oil prices, which curbed business investment, weaknesses abroad, especially in the emerging economies, of course, and commodity producers are, so to say, to blame. Cheaper oil didn't increase consumer spending, which was probably the single largest reason for the weak growth in the U.S. At least the housing sector did well during the quarter, and this could turn the March Federal Reserve meeting particularly interesting, I think. The advanced estimate does not include a breakdown showing which sectors contributed to the growth rate. Also, the first release is prone, of course, to the later revisions, but for now, it is enough to know if the latest quarter was really good or not. Interestingly, that the last available forecast for the Q4 GDP from the Federal Reserve Bank of Atlanta's GDP Now model expects growth rate to be exactly 1%, so slightly above the consensus of the market. And the key question is whether the weakness will carry on to 2016 as well. The weakness intensified towards the end of 2015, as we all know, which is not a very good sign. The U.S. dollar has been strong in trade-weighted terms, but the dollar index continued climbing in the final quarter, which should continue depressing exports in early 2016. Let's not stop here for any longer. Let's turn to the economists and their estimates on the matter. According to their views, we have, as always, the Bloomberg survey summary, where we see the median estimates at 0.8, average at 0.77, highest estimate is at 1.7, while the lowest estimate is minus 0.2%, and the total number of the experts surveyed was 87. And here, if I'm not mistaken, I have one quote for you. Yep. For example, research team at TD Securities suggests that this data release will be the key highlights of the day, while the senior economist of Moody's Analytics at Westchester in Pennsylvania says that given the state of financial markets, fourth quarter GDP could fuel fears that the expansion is unraveling. This would be misguided, as inventories will be a significant way to trade, will also be a drag. Uh, so let's move on to the Dukascopy community member sentiment just very quickly. I'm sorry, Max, everything just stuck on my screen. Sorry. Very quickly. So yes, Dukascopy traders are a little bit more bullish on the matter, 57.61% versus the 42.39% bearish votes. Of course, community members comment, but I'm not going to read them out because I have to pass the floor to Max. Please.
Thank you very much, Kate. Hello, everybody. I hope you have a great Friday so far. Speaking about the technical part, we have a negative surprise trading strategy today, of course, because the expectations for US GDP are quite subdued today. The economy is expected to grow by just 0.8% in the fourth quarter. There are many factors which have influenced the GDP last quarter, including the strong dollar, also which weighted on the trade balance of the country, also business inventories and business investment. We have the cable for the purpose of discussion today. And the buy market, of course, you already can see that the pound is somewhat already uplifted against the dollar right now. This currency pair has quite positive sentiment, continues to have quite positive sentiment. 61.59% of all open positions are bullish, and also the dollar is being sold in the majority of all the cases if we take into account all the currency pairs against which the greenback is being traded. And in the meantime, the pending orders are also set to buy the sterling against the dollar right now in more than 60% of all the cases, which only fuels the case about the bullish sentiment in the market. Speaking about the trading strategy itself, as you can see, the currency pair is hovering around 1.43 level right now, and it was projected to be the first take profit level for the pair actually some time ago, but in the last couple of minutes the pound gained some 25 pips already against the US currency. Speaking about the immediate reactions after the data is released in around 2 minutes from now, let's have a look at the previous reactions for the same data release for the first estimate US GDP data, and the average reaction used to be 30 pips for the cable in the last 5 quarters on average. And in case we take into account this average as the benchmark, we can project that in case we have a really negative surprise from the data, we can see the pound spiking up and above this important level of 143, potentially up to the 1.4320 level, which is the third resistance for today, which is also the 4-hour S1 resistance line right now. And of course, in case we have the positive surprise from the data, it can also happen, then we can see the pound dropping against the dollar, so the dollar is going to appreciate down to up to the 1.4265 level, which is, by the way, the daily first support level for today as calculated by the platform. So I have just 1 minute left until we will get the numbers in the chat section, and hopefully we will see the first initial reaction from the cable. Let me mention the technical indicators, which are, by the way, are showing bearish signals right now for the sterling, but possibly it can be explained by the fact that the pound has been losing value for some hours already, and the indicators just have picked up the trend of the pair and project further losses. But of course, everything will depend on the numbers themselves as usually, and hopefully we will see the market reaction in some 10 seconds from now. So let's wait for the data itself. I will remind that the expectation is 0.8 percentage points of an increase in US economic growth in the last quarter of 2015. So as you can see, the US economy expanded by 0.7% in the last quarter, which was slightly worse than expected. Economists had anticipated a growth of 0.8% in October, December, which of course is down from 2% in expansion we have seen in the third quarter of the previous year. But nonetheless, the market seems to be quite upbeat from this data, possibly because it is still better than some financial institutions could project, some economists could project. For instance, BNP Paribas Bank had anticipated even a contraction in GDP of 0.2%, while JP Morgan and Morgan Stanley expected only a 0.1, 0.2% growth. So from some point of view, it is not that bad as it may seem to somebody. It is still not a contraction, so the US for now is avoiding a recession, as some economists had already said some time ago. But still, we will have two revisions to the data when more information about the trade balance and other indicators comes out later in February and March. And everything is possible, but we will see that in some 3, I guess, weeks from now when we get the second estimate for US GDP. Okay, I guess that will be all from my side on the technical part and the results for US GDP economic data. Thank you very much for listening. I wish you all a great weekend ahead. See you on Monday, and I give the floor back to you, Kate.
Thank you very much, Max, and thanks, guys, for the participation. No need to remind you the numbers because they are still visible in the chat section. Thank you for being with us. I hope you get a lot of green tips on these news, and see you later. No, not later, but see you on Monday with the new news release and with another Dukascopy Research webinar. And for now, bye.